Donald Trump coming out of his first 100 days, he's the, has been deemed the most unpopular president poll-wise at this point in his presidency. You have you take a look back at the UK and you're like, okay, well, they may have a Brexit, but is that going to be problematic for their economy moving forward? A lot of people are probably looking at the extreme alternatives in France and saying, well, maybe we don't want to go the route of that, and so that the Brexit Trump effect is kind of wearing off, if you will. And so that's why I think a lot of people had hedged into it, and they're taking off those hedges today because they don't, obviously don't need them, because this is, I think if Donald Trump's first 100 days would have been a little bit more positive, in the media's eyes, in the world's eyes, it may be a little bit different story, but it's not. So yeah, I think it would have been priced in normally, but you had people that are that were hedged against the tail risk. Now that those tail risks have subsided, they're going to get out of them, and so that's why I don't know if today's the day. Like if you go, oh well, the stock market's up so much, why isn't the stock market filling that gap? I just don't think that that's going to happen necessarily today. It might be more like tomorrow or the next day. And so now the next risk for the market is going to be, the Trump
government
tax plan.
Bonjour Blake, comment allez-vous?
Je ne parle français. Oh my God, I related that. Anyway, so anyway, now Dale, because you'd stepped away, I was just walking through, being on the short side of the euro pound, and I expected it to actually, in this situation, rally. It rallied a little bit further than I thought, but now that we're here, I actually think that we could rally up towards 85.50. I don't think that's out of the question. So you got to prepare for that. I still think, I look at the euro, and the euro, I listened to a little bit of Steve's comments on the euro dollar. I still think the euro looks pretty bullish here, and I still think the pound actually is still constructive. So that's why I'm not really too worried about the euro pound, because the pound still looks, it's not really going anywhere at the moment, but it's still, it's still holding up pretty well. This is still flagging. So, right. The euro could go up from here. If you look at the euro dollar and you go over to the daily chart, we broke out of the triangle. Rough, this is a rough triangle, but we've broken out of it. We're basically respecting it on this dip lower today, and the euro looks like it's eventually going to make its way up towards 110. And I also think that the pound is probably going to make its way up towards 130. So
it's almost like the pound was the pound rally explosion was a foreshadowing. They're taking the dollar apart piece by piece.
Yeah, but the pound, there was a reason why the pound moved up. It wasn't it wasn't organic. It was because of obviously Theresa May and announcing the snap election. So I don't know if I would necessarily call it foreshadowing, but I think the euro is just playing some catch up now, and so that's why the euro pound had to bounce a little bit. But I think that now they could probably move in unison. We could probably see some continued dollar weakness. I sure as hell wouldn't want to be short the euro dollar, not necessarily the euro pound. I'm just saying the euro dollar. I think I'd be very nervous being long dollars, especially if risk comes off. Then you're going to get the dollar yen that's going to come down too. So anyway,
are you surprised by the reaction with the weak dollar that the precious metals took it on the chin? Because it went risk on with equities and
that's not surprising at all. That's not surprising. What's actually more surprising, you can see here's gold. Gold's respecting.
It could be a break to buy in gold, in other words.
Yeah, this might be a level that you're looking to be long. And I think gold, you just really got to see it above 1,300. But what's really surprising is actually silver's outperforming gold. You can see actually silver's. This is a daily candle. We gap down for the day. It's green. We gap down lower. We're actually a little higher right now. Silver's outperforming gold at the moment. So That's usually a more of a bullish sign for precious metals in general. So if I'm wrong and stocks start to come off today, we start to see some selling coming in today versus like tomorrow or the next day, then these precious metals might bounce. You know, and I'm not really going to do anything with gold until it goes above 1,300. Not for me. But it's interesting to see silver, you know, outperforming here.
Yeah, good point.
Yeah. So what I'm doing is I'm basically dealing with you know, the euro pound. I'm down now in my cost average from where I was short. I don't mind being short. I just don't know if I want to add. Today's not. I don't think today's the day that I necessarily want to add to my pound exposure.
Maybe a turnaround Tuesday, Blake.
Yeah, it might be, and you know, and what else is interesting is the DAX. You know, the DAX is hitting all-time highs today, or at least trying to. You know, the question will be, will the DAX, you know, continue to hit highs, or are we just going to, you know, plow stops above those highs and then, you know, turn back around again? So
it's diverging, you know, up here.
It is very divergent, but that doesn't mean it'll turn. But yeah, it definitely is. It is divergent on this move higher. So if we end up putting in a false breakout today, that would be probably not good for the bulls. But
so you know, did it take out that high that it failed against? I mean, there's a high all the way back there that Steve showed.
Yeah, it did.
So
it
finally did it. Okay.
It did it, and again, this is one of those situations where, you know, are we going to hold it? And if we don't hold it and we start to come off again, that's not a good picture longer term for the DAX. I don't trade the DAX; I just monitor it. But it's something that I'm definitely monitoring at this point. What else is interesting is and I'm paying really close attention. I bought the peso. Where's the U.S. dollar Mexican peso? I bought this one. Where'd it go? There it is. I bought the peso when it dipped this morning to 51 or 52, right down here, and it's ripping now, which is surprising. You know, and I think a lot of this might have to do with you know, maybe giving us a clue that the market might be a little bit more risk averse than we thought. So I wanted to pick it up as we're near the support, and when we gapped down here this morning. I don't know. There we are. We gapped down here this morning towards support. I, you know, picked it up. So anyway, but that's what I'm doing. I'm not really doing a whole lot. Just making sure that the euro pound doesn't get away from me and trying to figure out what I want to do with it next. But I just wanted to pop in. And Steve, I didn't mean to interrupt. So
Blake, it's always a pleasure.
We know. I'm the interrupter.
Yeah, you are the interrupter. Go ahead.
Okay, thanks, Blake.
All right. All right. I'm going to pass it over to you guys, and I will catch you guys probably tomorrow. So thanks for having me, and have a good rest of the session. And here it comes over to you, Dan. Bye, Steve.
You too, buddy.
Bye, Stelios.
Bye. If you guys want, I can. If you want, I can briefly speak about Norway.
Yeah, do you want to show your screen?
Yeah, I can try. I've never done this before, so you need to bear with me. I'm on my laptop, so I might screw it.
Let's give it a shot. I'm making you the presenter now.
Okay, I can see the button.
Here you go, bro.
I got it. Show main screen. Show my screen.
There's your macro.
Can you see it? Okay, perfect.
Yes, we're seeing the traffic light page, macro bias.
Excellent. So, I mean, for the people who follow me, they all know I'm a big fan of Norway in general, as an economy, as a country, as pretty much everything. And I personally think that Norway has a long way to go in terms of you know, rates and the kroner. It has been under a lot of pressure in the last couple of years, you know, on the back of oil, on the back of a lot of things. But as I always do, I take a step back and I look at the Norwegian economy, and it's still an economy that's doing quite well. They have surpluses, you know, conversely to pretty much every other Western economy. Okay, sure, 20 to 25% of their GDP is oil and gas, so they have a dependence on that. But it's not, you know, it's not like the Emirates or something like that where they are 90% dependent on that. So the kroner is trading a lot as an oil proxy, which I think has gone a little bit too far. But overall, the growth is okay. Inflation is above 2%, and Norges Bank have a mandate to keep it within, you know, 1.5%, 2%. So I think that they may be closer to raising rates than the market thinks. Actually, the market price is nothing at the moment. But overall, I think it's you know, it's a country that shows a lot of promise. And the problem that we have is that it's kind of like a common secret that Norges Bank defends, or rather attacks, the kroner. So they look at Euro Norway, and as every time it starts to dip, they just sell kroner and they buy euros. So that's the problem you've got when you're long Norway, and I've been long Norway for some time. But as Steve said, if you look at the chart, it was a great opportunity, I think, today to get in. There's this channel where the bottom line, you know, is acting now as the resistance zone. There's a lot of technical stuff that supports a short in dollar Norway, and I really liked it. So, you know, I put that on, you know, it's just something I'm looking at. And as you can see on the chart that we have here, I'm overlaying the oil price. And if you look at where oil is at $50, if you go back, when oil is at $50, the dollar in Norway has been quite a bit below. It's been between like 8.10 and 8.40. So there are a lot of reasons why I like it. Obviously, I've been wrong on many occasions in the past, so, you know, it might not work out, but it's something I really, really like as a risk reward now.
Still, by the way, there are a lot of people that don't even know about, I don't think you mentioned it now, about the Norwegian sovereign fund.
Yes, yes, yes.
That
You're
it
absolutely
owns
right.
assets roughly of 1 trillion, and they roughly own, like, what is it, 2% of all global stocks on average, 2-3%.
Correct.
What is it?
It's about $900 billion worth. It's about $135,000 per Norwegian citizen. So it's good to have that behind you as an insurance. So again, something completely different to every other Western country. I don't know any other Western country that has such a huge sovereign wealth fund. And Norwegians have been very, very smart. All these years where oil has been a major part of their income as a country, they've invested it. So, you know, that prudence and that attitude makes me really, really like Norway. So good point, Steve.
Thank you so much. Thank you, Steve. Great macro and nice looking chart right up at resistance. Your risk is what from today? How many pips on your entry here?
Well, the way I'm looking at it, my stop would be around the highs of 2016, so about 9. So it's quite a few, you know, these are the kind of trades I put on. It's quite a few pips away, but then again, your target is going to be, I mean, the initial target is 8, but realistically, the target should be in the mid 7s. So, you know, it's like 3 or 4% of downside, and then, you know, 10% plus of upside, with the probability, in my opinion, being heavily skewed for this to go lower. So it's a 2-to-1 trade, but I think probability is much more than 50-50. So I like it.
Thank you, brother. So there you go. There's from Stelianos Kontogolas, his look on NOK. And I'd like to spend some time here sharing some of the work from the community. And let me do so. So you know, we have some very good traders here in the house, and I want to share some of their work. That's part of what we do here in FACE. So this one's going to be from Shintan Patel. Thank you, Shintan, for sending this to me. That one's not working. I don't know why. I do know that Luca was looking for this bond rally to sell. Let's see what else we have here. That link did not work for me, buddy. You could repost it if you'd like, and I'll try it again. And we have Ronit coming up here. Going to give us our views. Yeah, H-Lam views on yen. There could be some more upside towards 112. And Luca was waiting for this area in the Bund. Let's see what we get. I remember him showing this actually before I joined it. So there's Luca's, he was waiting for 63 after this break, and now he's getting it. Nice look, eventually looking for the trend line to be taken out. This would, I believe, to be continuation of the bullish trend in Euro for their bond market to do this. Very nice look. Thank you, Luca. I'm going to try Shintens again. So I appreciate you guys sharing your work. So we have a bearish view on the Bund going into the French elections. That seems to be working. Here's Euro Pound. Okay, so here's some pitchfork work. Very nice work, Shinten. Thank you for sharing it. So you kind of agree with what Blake said earlier. You know, we could rally back towards 85.5 and still head back down. Your target level's around 81 to 80.50. Thank you very much for that view, Shinten Patel. Euro Pound.
That's a nice chart. I like that chart.
Yeah, see what you get from the community. A lot of people that hang out with us, they have a lot to contribute. They have great views, and it's part of my mastermind concept that, you know, we only have two eyes, Stelios, and that your community has many eyes and may draw your attention to a technical level that you may not have seen on your own. And that's the beauty of having a collaborative community. Luca also did pretty well on, looks like he held his Euro Yen.
And you know, you're absolutely right, especially on things like pitchforks, which I'm very bad at drawing. So, you know, I really, really like this kind of analysis. Stuff I can't do myself, you know, it's very useful.
Yeah, and we have guys that do, you know, a lot of Japanese stuff. I know that Steve does sticks, but, you know, the clouds, those types of formation, Ichimoku, I believe it's called. Let's see what Luca has here. Okay, that's the bond again. Rates on their way up as long as risk is on. Here's Luca's look at. Luca's looking for 122 and then 127 on Euro Yen. I know Hardianto was too. Let me ask you, Hardianto, how do you feel about the fact that you came out of, I think, some, hopefully not all of your Euro Yen? I think you took off half at the 38% level, which was the right thing to do. I mean, who knew, really, who knew what could happen and what the market reaction was going to be? So here's another look from Luca on Euro Yen. So here's how he comes up with its targets, 22 resistance, and then 27 back to the breakdown. Very interesting view. Everyone thanks Luca for that. So we still have about 15 minutes until our interview with the, it's going to be great because we're actually going to have a face member as our guest here. Let's see what Jack has here. getting a little faster with this stuff here, being able to share. And if you guys have different views of what you're seeing, you can express it, okay? And no one blames you if your charts or your intended roadmap does not play out as expected. So this is from Jack Boyson, and he's showing a couple of interesting lines here. It's an internal line and showing that we're holding, and looks like we'll be okay as long as we hold 27.30 on the break. Thank you, Jack, for that. Everyone thank Jack. Here's a natural gas look. It's from North FX Hero. Short is the way to go. I remember buying nat gas with crude when it was down there. So that's a real nice look. If you trade this instrument, looks like a failing rally to me. I think that's a great view. See how many good traders are in the shadows in our community? Very nice view. That does look like a failing rally, maybe a right shoulder. This is your neckline. Thank you, North FX Hero, for your view. Here's Armand. I've been watching Armand trade for a long time. I don't like to fade Armand. Armand was bullish, the pound and the guppy last week before it exploded. See what he's saying now. Usually, to show you that I know him, I'm betting that his chart will be on a black background. There it is. Black background. Said he's kind of an old guy like me, says it's easier on his eyes. But here's his euro count. So looking for a little pullback, we got to 960. Maybe back to 8.5, and then he's looking for 14. This also lines up with what some of the Elliott Wave guys were talking about, including Peter Temple from last week. He was talking about a rally, and then this whole thing for some wave guys could be a 4 before a collapse. So thank you, Armand, my trading warrior brother. Nice look. Here's something from Dan Norberg. Dan's been waiting to sell this forever. Thank you, Armand. Armand's looking for 114 euro. So this thing is just beginning then. Like that thing comes through. There's Dan Orberg's view. Okay, looking to short the Kiwi up here. Right here's Dan's zone up here around 71 to 71.40. 71.10, 61.8 back. Nice look, Dan. Thank you, buddy. You know, you guys could take screenshots of any of these views. We're getting a lot of great ideas here in the last few minutes. There's another one from Luke, and Hardianto still has half. This is a euro yen. I've seen your euro yen. I've seen the natural gas. Here's another look from Armand. Let's see what his pound call is now. So you guys have me and Steve and Blake, Nicola, and Grega. If you can't make it here, you can't make it anywhere. The pound, that didn't work, buddy. There's another one from Dan Norberg. I'm guessing you're looking for 130 in the pound or higher now, Armand. Maybe you could post it again. Okay. Euro USD, a flag. 38% pullback. You'd be a buyer at 820. That makes sense to me. What, at 38%? You already did it on this pullback last night. Thank you. Ardianto, what do you have here? All right, let me try your pound again, buddy. All right, you're going to be on deck in a few minutes here, buddy. Looking forward to hearing Ronit's presentation. It's been starting in about 12 minutes. I don't know why that's not working. I'm gonna just hand copy the whole damn thing. Try it one more time, Armand. Does your first look work? Try here. Here we go. Had to copy the whole thing. Wow. Okay. So it's going to be 2 steps forward, 1 step back, move all the way up to 138, 139 in pound dollar. That's something that had been forecasted by Yoda, I believe, Steve. Yoda. Looking for 140. Peter Temple said 150.
I think so as well.
So that, yeah. Okay. And there was one from Hardianto I want to show. Where was that, Hardianto? EJ? So let me ask you this, Steve. You're a great technician. What do you think about the talent we have in the community? Have you seen any looks at you hadn't considered that maybe you're going to take a look at now?
No, it's nice to see that we have a lot of people that participate that are using a variety of skills. I've seen we have people that do harmonics, people that do Elliott wave, people that do basic technical analysis, and many of them are on the right track. But we were having a discussion yesterday. Actually, I was explaining to a friend of mine that is actually working for the company, but doing stuff. Velu, you've actually met him.
Yes.
Yeah. So I was explaining to Velu because he's a really smart guy, and he understands maths, etc. So I was telling him that, listen, from a mathematical perspective, trading is extremely easy. Theoretically speaking, it's extremely easy. Because if you think about it and you're not in the game, somebody would say, okay, choosing randomly a direction at any given point and respecting at least a one-to-one risk reward should at least get you to break even. Okay, minus the costs of trading, which are not a lot, like spreads, etc. So theoretically speaking, somebody that is doing research and is working on the issue should be making a profit. But as we all know, that's far away from being the truth.
Reality.
Yes.
Yeah.
The reason that it's far away from reality is because some of the basic and the most important attributes required to be able to be a successful trader are mostly mental. You need in many aspects to be able to go against the human nature and the human psychology, to go against fear, against greed, against a spontaneous reaction when you see the market moving away from you or in your favor, of trying to book profits too early or trying to take a loss because suddenly you feel less confident on your plan, etc., etc., etc. So I was explaining to him that making charts and being a good chartisian and calculating your risk and reward is very important, and it's something that it can be taught, and of course talent always makes somebody better than somebody else, and I see that we have people with a lot of talent. The important
stuff, you're absolutely right. It's much easier to be an analyst and make a call than it is to execute it.
Exactly.
And it is because of emotional and psychological reasons about fear and greed. You're
exactly.
Right.
Exactly. And I'm pretty sure that we have people. I mean, I see people that have been on the market for a long time, and as you very well know, the only way for that to happen is for you at least not to be losing money. And as you've said plenty of times in the past, I deeply respect those people, because you need to go through a lot of waves to make it to that point.
Okay, Steve.
And that's what we want to help other people do, as you very well know.
Right. Okay, here's a look on Canada. Let's see Ariano, if he gave up or is still looking for this Canadian. Let's see what we have here. And then, guys, I'm going to take a quick break, and then Ronit Singh is going to be with us to show his views. When I first met Ronit on Twitter, he was a super dollar bull. Long term he is. So I'm going to warn you in advance. Looks like he's kind of a deflationist. I think that the tune has changed, at least temporarily, with this recent action. Although he's saying 109 is pretty significant resistance. Okay. Ardianto is a pretty good waiver. So he's actually looking for a pullback. We completed something here. So Steve, you were talking about it, even though we pulled back. I've seen Hardiano's stuff work a lot. So he's looking for a pullback towards 3.5 or so, and then new highs. Thank you, Hardiano. Nice view. So I'm going to take a quick break, and then we're going to start our interview in about 5 minutes. So let me do this, then let me do this. Be back in 5. Okay. We're getting a new update on pound. Getting a new update on the pound.
Dale, we
Basic.
can see your screen.
Here it is. So here's the traffic light page. Just want to give you guys a heads up. It's basic technical on the pound here. Intraday, the pound is a strong hourly support, which some of the community has shown at 760 to 770. You know, our bias here is still positive. You can't rule out a pullback to 27, even 26.50. I saw a count that could take it down to 26.50 before we resume. You know, basically you look at just arithmetically 129 and call it 770, that's 130. That would give you 650. So actually if 650 pops up, guys, to me that's going to be a great entry. If the market offers it, you may want to write down that number. Everyone understand my analysis. It's based upon what we're looking at here at ForexAnalytix, and it's a strictly arithmetic move from the high to the low, and if we break this range, it's going to take us to this 200, around 670. So that would be a great area to position yourself for new highs in the pound, which I believe most of us think is coming. Give me a Y if you understand what I'm talking about here. It's just simple. If you can add and subtract, divide and multiply, you can trade. So it's just a simple arithmetic measured move. You could do it from this range or you could do it from the spike high. That's going to take it under the 27 handle. Everyone with me? All right, let me look for Ronit, and we're going to get this interview underway. You ready, Ronit? Okay. Why aren't you showing up here? Ronit S. There you are. You're now the presenter. We're turning our screens over to you. Are you a control freak? Because if you are, here you go. You're in complete control. Go ahead, buddy.
Hello.
Hi, Ronit. How are you?
Yeah, I'm good, man. How are you? So,
all right. So before we get to the instruments and your views and everything, I met Ronit on Twitter. He showed some pretty extreme bullish dollar views. I mean, even more bullish than famous guys like Raoul Paul out of the Grand Cayman, mini Grand Cayman Islands, hedge fund guy who's on CNBC all the time that I've interviewed quite a few times, who's eventually looking for a 75-cent euro. And I'd like to know from you, Ronit, how long have you been a trader or a market watcher, analyst? How long have you been doing this, and how did you get involved in it?
Basically, in 2007, I was actually watching my aunt trade, and she was going in and out at a particular time. So that got me curious because I had a liking for mathematics. So why is it? So there was a timing cycle. I had to figure out why so somebody was actually trading at a particular point in a day. So that's how I got in, and one thing led to another. Then I came across some tools, WD Gann's work, and then I discovered certain cycles, and it's quite amazing. At 1909 was when WD Gann actually discovered some interesting things, and I could actually see all the moving parts together. So that's how I actually develop my own strategy, like time cycles, which
Okay.
we'll discuss about.
Well,
So
GAN is I've heard it from Nicola Duke. GAN's a very difficult discipline to wrap your head around. So you must have go ahead.
yeah, everyone has his own version. So and there was a particular article which said that WDGAN was in India too. So in India, we have a lot of mysterious mathematical stuff. For example, you might have something called 108 in your famous number, or pi, or even in Greece, structures were made out of 1.618 golden ratio. So there is a connectivity out there. So how do you use it is the real question. So he never revealed that. So there is a connection. So my curiosity led me to tweak it so that I can actually see what are the moving parts of the dollar and other things. So now it's actually got so good that I can see currencies, commodities together. So
Thanks for coming here. Thanks for coming here and sharing your work. So we're looking at the dollar index. What is this, a monthly? Yeah, monthly.
Yeah, this is the monthly long-term chart from 1970 because I don't have the chart data.
Okay, so we broke out and it looks like late 2015, and we've had a test of the wedge in early 2016. Are you looking for another test of the wedge line?
I doubt it, because if this is like 99, so let me go to a particular chart over here. I've made a presentation for each asset class. So let's say we'll start with currencies. So 1 minute, this is interest rates. So let's start with dollar monthly. So how do you say what level is right and wrong? So that's the question. So I assumed that what could be the level it could go, and then from there you actually pick points. What are the pressure points, kind of thing. So why does it react to 103, or why does it react to 92? And when the Trump election happened, it actually retraced to 97, 98, and then bounced from there. So so all assets have a certain kind of pressure points. So at that pressure point, it actually reacts. So for example,
did GAN call them pressure points, or that's your terminology?
It's my terminology, because there's not a lot of work out there which actually calls for a certain point. So Fibonacci, everybody uses Fibonacci, but how do you come across that Fibonacci? So you have 0 to 100, and then you say 66% or 61.8. But what exactly does it mean? So in 1.618 golden ratio, why actually they call it is, it's some kind of wave, scalar waves, longitudinal waves, you can call it. Like that is the way a universe expands, right? So even construction can be done with that. So even you can actually see Fibonacci and other things. It actually originated in India. So the relationship with the price starting point is very critical to see how long it will travel, or will it retrace from there, and other things. So that's where the theory comes in. Now, how do you use it practically? So what is the starting point? In this chart, it is somewhere around 70.8, which was the low in 2008 Jan, and everybody was bearish on the dollar. Why did it turn around exactly at that point? So there is a connectivity from 1985 top to 2008 bottom. Now, I can't show it over here, but let's proceed with that. So this is actually a dollar chart. If you actually just follow the levels, you can actually trade better with this. So why did it react? If there was a problem with a currency today, it would actually spike to 102, 103 immediately, and then you could have reacted to a situation where Europe could have actually broken 1.065, which I was talking about. So we'll move to other slides where I made it.
Well, why don't you tell? Okay, go ahead.
Go ahead. So this is Euro USD chart where you can see something like 20 years cycle. and there are pressure points over there. So why did React stop at 1.095 and then it bottoms on 1.033? So that was a very critical range. So the problem for this to understand, I had actually, I wanted to understand what is the dollar index made of, what is the composition, right? So let's go to an Excel sheet where I made it. So it actually says euro is 57.6%, Japanese yen is around 13.6, GBP is 11.9, CAD is 9.1, and then the Swedish krona is around 4.2, 3.6. So you have to come up with an equation where it actually calculates live what is the current dollar index with respect to these cycles. Okay?
Yes.
So let's assume that this could be a dollar value. You can actually punch in any numbers, say if the euro was 1.09, what would be the value of dollar? So you can see over here it changes over here, dollar index, right?
Interesting.
You're with me? You're with me?
Yeah. Yep.
So let's say you were talking about 112, so I just punched in 112. So what could be GBP USD at that particular point is the question. So right now it is around 1.29. Punch it over here. Can you see it reducing?
Yes.
So 111, let's say right now, USD yen, USD CAD, I assume the weightage is very low. It doesn't make a big difference. So it's around 1.33, right? Yeah. And then Chef Euro is, Chef USD is around 1.98, something like that, 0.98 or 1.02. I haven't checked. So it actually closes in the gap. Now the question is how much devaluation is needed to get a particular number is the question. So let's say the euro actually plunges to 0.65. So how much is the percentage wise? So right now it's 1.09. So let's assume that the euro plunges to 0.65 or something like that. So divided by 0.65. So you get somewhere around just inverse of that. That's around 40%, right? 40% deval. Okay. So you punch in a number over here, say 40% deval. You can see in the right. That's the devaluation. All these numbers shift immediately. So these are the euro USD. So what I do is I just copy this number over here, the assumed values over here. That's the 0.0 euro USD. Just copy it, paste it over here. So can you see over here 140 Raul Paz number she's talking about. So that's actually a minimum devaluation. So I'm assuming that there will be a risk off. So USDN would actually go lower. So we'll come across that in charts. So how do we do this? This is a basic step to see what are the moving parts. Which currency will actually do what. So this Excel sheet is for that. Now let's come on to normal currency pairs. So what really is happening in USD dollar? So even the Australian dollar is actually, if you really see, it's actually 0.77. It has retraced, and this is a large triangle over here. So let me come to Euro USD 1 minute. So this is Euro. So you can see those levels over there on the right hand side, 1.158. And people actually predict it could actually go there. People use Elliott waves and other things. I use some kind of mathematical model which is derived from GAN tools, which we'll actually talk about later. So this is Euro USD. It's vulnerable. You can see that orange line, which is actually from year 2000. It actually goes till there, and it is just it's bouncing around that 1.095. So how do you interpret this? Is maybe the there is a problem out there in the eurozone till it actually crosses that, and there is the vulnerability is still there. So we can't say that euro is actually very bullish or euro yen is quite bullish. So right now the US market actually has surged. So some kind of painting in the market that it's quite bullish. So central banks have that ability to do. We have seen that in the past. So let's move on to some of the chart. So this is GBP USD. So can you see over there, I have actually connected some particular points, and there are certain points on the right hand side. So you can actually see 1.146, there was a crash. Then you can actually see 1.468 where the Brexit happened. And now actually it has retraced and stopped at 1.294. So there is a symmetry out there, right?
Okay.
Are you with me? Yeah.
Yeah.
Yeah. So let's go to USD yen. Now what's happening from 1985? The whole debt cycle actually was created, and this currency USD yen was actually appreciating, and it doesn't go up at a particular point. So you can see that particular angle where it stops at a particular stop. So we can actually everybody is bullish on the yen. Yeah, maybe. But what if it is not? What if it is going to 60 or 70? Nobody's prepared for that. People say that Trump has got elected, or Le Pen will get elected. But what if it is the time? It's like a time. It is supposed to happen, whatever the trigger is. So these are actually cycles which I've drawn. Can you see here, Feb 1985, and then it actually bottoms out when nobody thinks that it is. So that's a cycle inversion kind of thing. I'm not showing the cycles because that's prop work, but there is a connectivity.
So they were 7 years apart, those cycles.
You can say that, yeah. So you can divide that 7 into multiple parts, and you can call a particular turn in cycle. So the news flow actually changes suddenly, and everybody gets bullish or bearish or flat, whatever.
So do you think there's a possibility? I mean, I see the one drive down in 95, the second in 2012, that there's another one coming?
Yeah, that's the whole idea. So we'll actually look at certain indices and what the currency pair is behaving like. So I explained to you why the euro was actually not bullish, and still the indices are actually pushing further. And last time we talked about it, you can actually see the DAX actually one more push up could be there. So we'll see that in indices chart. So right now what the currency is doing, we see a particular moving part, and then we see a bond market, what it's doing, what gold is doing, and then what the indices are doing respectively. Because people might say that although the capital flow might be happening in US, that's why the US market is blowing up, going up, and because there is a dollar inflow. Yeah, possible. And same thing, same reason could be, for CACRON or CAC or Europe. But if you really look at it like a cycle, then you don't have to worry what news is actually flowing through. So that's the whole idea about it.
Okay,
So
I'm getting a question from the community from Ben Morgan. What's your forecast on the U.S. dollar? What's your roadmap for U.S. dollar here?
Okay, the roadmap is something like if you can actually look at what's the dollar doing over here. So this is something like a bullish descending triangle, which in technical ways. So
or symmetrical, or that was like a symmetrical triangle. So you think there's a possibility of down the road of actually what, 180, 190 Dixie?
Yeah, possible. It depends on where the euro is actually going, because 57.6% of the dollar Dixie is euro. And if the euro depreciates, then obviously other currencies will not be left behind, because there is a cross-currency thing which is happening. So that's the part, and everybody is looking for a particular person actually getting elected. So whether it is Le Pen or the other person, Macron, it doesn't matter. So you have to look for levels where suddenly the whole thing changes. So let's say we assume that 70.8.
What are your key levels right now in Dixie and euro?
Okay. So the Dixie is actually 1 minute. The Dixie is around 9900. Can you see over here? So that's
there. Okay, all right, got it.
Unfortunately, I can't show you the numbers, which I will show you. I can actually give a format where everybody can actually follow it. It actually works. So the Dixie actually is quite, again, testing, and this is a semi-log chart, and it is actually testing this part. So anytime it is above 100, it's actually very bullish. It's not bearish at all. So everybody is watching this, because what if the currency actually goes to something like 86 or 87, that could be very bullish for gold, crude, and how do you interpret it is the question. So that's plan B. What if this happens? So let's look at a commodity like crude, how it is behaving.
So do you think that we're going to head down to 85?
I don't think, but it's possible. Because if you really see what is happening in Russian ruble and say, this is the crude chart, which is the daily chart. If actually it breaks 50 and 49, then it is actually heading to 20 or maybe worse. Okay, so there is a channel out there. But if there is a different scenario which is playing out, if the crude oil is actually going up, can you see the orange triangle, which is 147, and then it hits 113, and the bottoms are fixed. So that means if euro is going to 1.2, 1.3, then crude could actually go to 87 or even $90. So 1.23, and that could be kind of a ratio if it really happens. So that means the first signal will be it is above $52. So there is a symmetry out there. So if it is above $52, then all US CAD, everything will start shifting. But I have my reasons why it might not go there is because of certain currencies which are behaving differently. For example, the Swedish krona, which is highly dependent on a particular, oil and gas.
And because of your view on Canada too, right?
That's right. So actually, the Canadian indices have made a wedge kind of pattern. All markets are making a kind of wedge. So this is Canada TSX. So if you connect the 2007 top and then 2014 top, it's actually making five moves. This could be the ending triangle, could be, but we don't know yet. So either this indices will give up. So if you really see from 2014 to 2016, when a Canadian indices were breaking, that means what really happened? The US dollar was rallying. So this could be like a tip-off. If Canadian TSX or the US CAD is above 1.33, that means the dollar is getting stronger, not weaker. It certainly has a certain lag effect. So that could be a reason. And then you can actually see these triangles playing out in DAX too. DAX is around same triangle 2007. That's why I expected a pop, but not necessarily it connects to that particular top. So technical patterns are such that we are stuck to a particular point. So that's around 13,700. So if there is a rally, probably that could be it, and then we could have an oil shock. We could have only if oil.
What's the time cycle that points towards on the DAX? What's the time cycle that you had above that chart?
That's June. That's June month. This is a monthly time cycle. I mean monthly chart, and it could be around June first week or something like that. But it's not happening. Today's reaction was not good enough. So 1.09 euro didn't rally above that. That's a danger sign. That means the euro could plunge very badly for whatever reasons. I don't know whoever gets elected. So that's one more thing. So let's look at something like S&P 500 itself. Everybody's bullish. Could be. But if you really see, this is like a corrective wave. I'm not very good at elite waves, but I do use it to see what is the expansion which is happening. So if this is ABC from 2000, then there is ABC from 2010, and it's something like 335 kind of thing. I'm just assuming if somebody is good at it, probably they can actually correct me over here. So it actually stops around 2400 S&P 500. So that means it's still weak, but we don't know yet. There is no theory which says that it's going to turn around at that point. But 2400 is really an optimum level where there could be a crash, but we don't know yet. We need some more proof that this could be a major top. Okay. So going on to something like there was we have this banking index which is BKX, KBW, I think. You can actually check it another. So if you really see every financial crisis, there is a 5-year timeline over there. So 5 to 10 years. So 10 years, 1999, 1997, 2007 was financial
capital management. Yeah,
and then there was I think this could be the big break if this KBW index has actually started plunging below 80 or something like that.
Yeah, and then actually the banks gave back the most. They're down on the year compared to the rest of the market. So you think that if there is a financial crisis like usual, it'll be led by the financial sector? Could it be led by instead of it being the U.S. financial sector, be led by some contagion from something in Europe or Japan?
Yeah, it will be contagion. Maybe interest rates could spike. I'm not actually not a deflationist, but a little bit of a rationalist, where there are moving parts to this. So if you really see the financial crisis when it happened in subprime, it actually started in Feb 2007, but then it took 6 months to actually clear the air. So
Right.
that was the real thing. So right now, 10 years after that is Feb 2017, and BKX index, this US banking index, actually topped out exactly around that level. So people might say that US yields have fallen. That's the reason banks don't make enough money. Possible. I don't know.
Okay.
But
well, there is one thing, and we're starting to run out of the time. There is one thing I want you to cover, because you were a witness to it, because you were on the ground. So
right.
Modi, his grand experiment to go cashless in India could be a test case for many other modern democracies. So tell us what it was like on the ground for the majority of the Indian population when overnight he came up with this cashless policy.
Okay, let's start with some background. Probably I knew this 6 months back, but I didn't believe it will happen in India, because everybody has cash. They believe in cash. They don't actually like the banking system. That's why the whole population buys gold. Because in old ancient times, when the king used to come for their cash, people actually used to buy a lot of gold and actually stuff it under their house. So like pots. So it was a similar scenario where Romans used to do that. Now, what really is happening, if you really see Feb 2017, when euro was plunging, crude oil was $26. They came up. There was a G20 meeting where they actually talked about it, but they had certain problems out there where our central banker, who was actually kind of Raghuram Rajan, he's actually leading IMF. He was not supporting this move of demonetization. It was actually not demonetization. People don't understand, this is not demonetization at all. It is more to do with connectivity with the Aadhaar, which is a unique ID, which is a pilot project funded by IMF and all the bankers. So they want to see if a chaotic country like India, which works, they actually go through this cashless society and command and control. So right now there is no reaction as such, but the money supply is actually reduced by 30%. People are supporting it because they think it's for good, but I don't think it's for good, because once you give the control to the government, you know what really happens. So they tried November 2016, they tried 2015 sovereign gold fund, where they wanted you to actually give up your gold. It didn't work, kinda. And they started asking for people, most of our temples are loaded with gold. So they were actually going after that, and they said that you don't need physical. So it's something like Larry Summers, or kind of person who actually wrote about Gibson's paradox about gold leasing in 1990s. He was actually pushing this idea. And surprisingly, Larry Summers actually came after demonetization, and he said it's not for India. That means it was for India. They wanted to try this. So if you really see who's supporting this kind of move is the Europeans. Australian minister was here. So they know that their currencies are in trouble. They're vulnerable to the dollar. And so with the urgency which was done, if you really see when the demonetization was done, was November 8th. And Trump got elected on November 9th. So everybody assumed that November 9th, Trump was not going to, do a similar thing in US because there could be a revolution. So November 8th, it was done in a hurry, and it was a disaster basically. But people are coping with it because some people think that it's for good cause, but I don't think it is. And most of these farmers actually are suffering. But let's see what happens. We don't know what is the consequence of it. But ultimately, it's not, even gold is not safe because you need food to eat, and a lot of people don't realize that. So, so the bullish market is even in India is because of the hot money is actually moving into stocks because they can actually tax the excess cash or fixed deposits which people have right now, and they can actually force this kind of Aadhaar card, which is a project. IMF actually came up with a paper called cashless, going cashless. So there's something brewing in that G20 camp. Everybody knows it. They're actually watching it very carefully. If it actually, India actually plunges, if it happens, then probably they will write it off. But if you really see what is happening in the currencies, it's not very good. So they're figuring out a master plan kind of thing. So we can see that in normal interest rates. Before we close in, I just want to say if the US interest rates are actually very vulnerable. If US interest rates move up, the currencies actually start moving down, which is what a deflationist scenario happens. So a lot of people think that interest rates might go down with the US dollar rallying. Possible it has happened before, but what if it doesn't and interest rates spike to 6-7%, which nobody has thought. And year it was 7%, the 10-year yield around year 2000. What if it goes there? So that could be because other central banks will start selling to protect their currencies. So that's the whole theory about. So there's something like 14 to 15 trillion dollars of emerging market debt out there. So you have to watch that 9900 DXY very carefully because that could set the tone. And crude oil below $50. So if you have any questions, you can actually shoot.
Okay. Thank you so much, Ronit. That's Ronit.
And before I just want to show you, this is the Euro chart, which I was talking about, 1.065. If you actually take a screenshot and actually keep it, this is working. So 1.065 on the right-hand side was the live value. So it actually moves 1.07 and it moves in this pattern. So it might help. And if somebody wants on a particular asset class, you can actually contact me on Twitter. So hope I did explain my thesis. Okay.
You want to give out your Twitter handle again?
Yeah, you can actually message me on Ronit Q9, RIRONIT Q9 at Twitter. So
thank you.
They can message me, so I can do my best.
Thank you, my trading warrior brother. Thank you for opening our eyes to some ideas that are not really conventional, but are insightful. I appreciate it very much.
Before I finish, Dale, I just want to show you something very interesting on the Dow Gold ratio. This is actually a Dow Gold ratio. You can see if the Dow actually is moving above, it's outperforming gold or not. So there are ratios over here. You can actually see it topped out around 40, 44 in year 2000 and actually bottomed 1980, somewhere around 1980 Jan was around 1. So if you can actually remember these numbers, you can see where the what particular asset class is moving. Same thing goes with Dow DXY. So you can actually try. But this is a very interesting chart about the yields in the stocks. So if this is the real bubble which actually was built after 1981 through debt cycle. If the interest rates spike, you can see what happens to the Dow. So it's not a direct correlation, but it's an interesting thought. So I hope it helps people to make a good call on their trading. Okay.
Thank you, buddy.
Okay.
Thank you, everyone.
Okay.
That's Ronit Singh, and you can find him on Twitter, and appreciate him taking the time out of his day. He does hang out with us here, and to show his stuff. So you've seen a FACE member share his analysis, his views, his methods, and Anyone else that's interested in doing so, just let me know and we'll schedule a time for you. I hope that today's session was useful and that it added value to what you're trying to accomplish as a trader, and look forward to working with everyone tomorrow on Turnaround Tuesday. If you'd like Rona, you could just type your welcome, Joe R. You'll find it under it's Stealth Trader, and you could always just write in his name, Ronit Singh, and it'll come up.
Or you could actually mail me. My email address is ronitq9@gmail.com.
Okay. So thank you, Ronit. Thank you, Steve Volge. Thank you, Stelios. Thank you, Blake, ForexAnalytix team, and everyone for hanging out with us today. See everyone tomorrow. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. You're very welcome, Kevin. You're welcome. You're welcome, Hardy. Nice trade. Thank you, Bill. See everyone tomorrow. Adios.